Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Hey y'all, today I need to give you my anti-watch list. Now this is the first time I've ever done something like this, and it's basically a few areas and companies that you probably do not want to invest in. I'm not saying that this is a sell everything right now, but these are some areas that I would be very, very concerned about moving forward over the next 6 to 12 months. Now also remember, tomorrow we're going to get our inflation numbers, updated inflation numbers for September. We'll see how that goes, and then remember, on Friday we're gonna get more news about how some of the banks have been doing. So I've got my little pencil and paper. I've been scribbling down a bunch of stocks and notes that you might want to pay attention to. Again, this is just my view of like, hey, I don't think this is going to end well for you or anybody really over the next 6 to 12 months. One company I own currently, and I'm really hurt that the fact that this company made the list, and there are some good and bad things that you can consider here. You could say, hey, look, these are some of the worst stocks that had happened. Should we go into a recession? Maybe this is my time to continue buying. I'm going to hold this company for the next 5 or 10 years. You are more than free to view things that way. Okay, you are more than free to do that. But I'm just giving you my criteria, what I'm looking at, and then we'll go forward. So what I'm looking at is, number one, how have some of these companies performed both recently, and how do they perform over the last 3 recessions? That's number one. Number two, how do I think that the market and the economy will judge these companies over the next 6 to 12 months as well? So those are the things I'm kind of looking at and say, look, this hasn't gone well. There's a few other things that are going to shake out over the next 6 to 12 months. I don't think those things are going to be even better. So first company I have here is Aurora Cannabis. That is ACB. It's a penny stock now. Again, they're in the cannabis industry, and that has been a boom and bust industry, you know, over the last, since like 2017, 2018. Let me also say that especially something like a penny stock, any of these companies, I can be wrong here. Okay, this does happen. Aurora Cannabis could be the next GameStop for a little bit and be the best performing thing in the world. So it happens, right? But here's the thing, they are down 96% in the last 5 years. You got 5 years and you're down 96%. I could also argue, like, how much lower can it go? But that's clearly not good. My anticipation why I put it on the list is, number one, the reason why this company was even popular to begin with is because of the hope of the legalization of marijuana in the United States. That was the main thing. And yes, some states individually have passed them, and that there's definitely some momentum there. However, when the current administration was installed, most people, and you would see the stocks start to pop, because the thought was, you know, being a little bit more liberal, having different stances on things, perhaps we would go for the legalization of marijuana, and that was going to be a thing. Well, midterms are coming up. If things go the way that most pundits and polls are suggesting rather, the party that should take over, or the party that we assume will take over, are not likely to pass anything in terms of the legalization of marijuana on the federal level. And it just doesn't seem to be a priority for either administration over the last 20 years, if we're going to be honest about it. So I don't see an opportunity for Aurora Cannabis to really become the next, I would just say, a solid company. Definitely not the next Google or Amazon. I don't think anybody made an assumption that it would be there, but I don't see it being a normal company. Again, it's like less than $2 at the time of this recording, and that's obviously not good. Anything less than $5 you always want to avoid, regardless of recession or not. I'll also say that I'm coming at this list assuming that we're going into a recession, and a pretty significant one, based on what the banks have already started to say, based on how Walmart and Target are moving with their sales, based on the fact that we know about 30% of American savings has already been spent. So while I don't like to be a downer and I don't want to be pessimistic, I see what I see, right? And I can give you the information that I currently have right now in time, and it just doesn't look good over the next 6 to 12 months. Hopefully that's not the case, but that is kind of what I'm looking at and how I'm kind of creating this list. Now, next here is Coinbase. Coinbase had a 66% drop in gross profits in the previous quarter. I think it was June of 2022. That means the money they're bringing in at the top, that's before you account for the overhead, the factory. Well, I guess they may not have a factory, but like employees and things of that nature. Before you even factor that in, that means their gross profit dropped 66%, and you didn't even add in all the rest of the cost. That ain't good. Crypto is in the trash right now for the most part. And I don't really see a reason as to why that will recover quickly. I just, for what reason? The other thing too, I've never really liked Coinbase's business model in terms of, brokerage fees. Like almost nobody does that now. You can donate on certain platforms if you choose to, but nobody's really making money on like, hey, I'll pay $20 or $5, whatever it is, to buy and sell crypto. It's just, or buy and sell any stock, which again, I know they're not the same as crypto, but is similar enough where somebody's going to come along, and Cash App has done this and some others where, yeah, you can buy and sell whatever crypto you want and pay $0. So I don't really understand how Coinbase is going to survive unless they make some drastic strategy changes, which they're more than capable of doing that. But also tech companies, with the continued rise in interest rates, I am expecting, as well as many others, that interest rates are going to continue rising all throughout 2023 until we absolutely stamp down inflation. You're going to get a better hint of that tomorrow. I think that report comes out between 8 and 8:30 a.m. So we're going to find out very quickly how the Federal Reserve is performing in terms of stopping inflation. If inflation is where it was last month, 9% or so, or 8% and higher, that's not going to be great. And I don't think it's going to help companies like Coinbase and others. And I don't think that's something that's going to improve in a quick manner. Next year, you can lump in a lot of companies here. Banks. I feel some type of way about banks because before the Russian-Ukraine situation, before we knew about the recession, before we knew about the way inflation has taken off and hasn't really cooled off, banks were on paper, and we said this before, were supposed to be the best places for just interest rates by itself. If interest rates are going up and it's banks, those two things work. But when you add in recession, when you add in inflation and other things, they're not the best places. I think we've all learned our lesson, myself included. Thankfully, we learned this lesson very early, and most of us have already rotated and made some different decisions. Y'all saw me get rid of Capital One, I think back in June, if not sooner. So here's the thing. Including in banks, you can say broadly financials, PayPal and Square / Block. No, it's just not. It hasn't been working for more than a year for both of those companies. Y'all saw me get out in December 2021. And I love Block and I love PayPal. I like the way the companies are organized. I like what they do for the most part. They're really innovative. They're efficient. A lot of times, and I don't know about 2022, but prior to that, 2020, 2021, you can go back into 2018, 2019. Financially, these companies are solid. They're like, it shouldn't be bad for these companies, but it is. And when you lump them in with the banks and people are expecting spending to slow down, and we've seen that with inflation, that's just not a place that I think makes sense. Unless you really truly believe in PayPal and you know you're going to hold 3, 4, 5 years and beyond, which is a very long time for you to anticipate what's going to happen in the markets for that long. Okay, I know my thing is, what can I anticipate and get ready for the next 6 to 12 months, and then get there and then reevaluate, get there and reevaluate, because that's realistically it's the only thing you can really quote unquote predict, and we have many studies that kind of confirm that is the case. So Block and PayPal is a definite no for me. It's been a no for a while. Banks, no, there's just not going to be a place either. I don't think that's something. If it's on my watch list, I'm like, I'm just going to go look somewhere else. So that's another thing that you want to consider, just, not taking a whole bunch of time on. Now, you can lump this into the banks. It's American Express. Now, I like American Express. I own American Express myself. It's a company that when I bought it back in June, I wanted to keep in my portfolio for a very long time. Same way I think of Apple or Google. I don't think it's the exact same, obviously, but that's, in my mind, any company I buy, in my mind, I don't want to have to sell it. I want to get it, hold it, and just, this is going to be with me for a while. Well, over the last 3 recessions, the S&P 500 drops on average, there's an average here, drops about 13%. Okay, last 3 recessions on average. American Express dropped an average of 30% over the last 3 recessions. Does that mean that's going to happen? Does it mean that one, the recession is definite? No, even though I'm at like 80-90% that it is. Aside from that, does it mean that that's going to happen this time for American Express? And again, that is an average. That is not a guarantee. It's just not looking great for American Express. I do not know what I'm going to do with my own holding in American Express I'm gonna wait until December, see where I am personally, because remember, I dollar cost average, and I kind of pick my spots when I decide to jump more into American Express. And the last time I checked, and it's like 2 or 3 weeks ago, I was still positive on American Express. So if the market's down 13% or even down 20%, close to 20%, which is where it is today, I'm not gonna sit here and be arrogant and overconfident and say, well, because I'm the greatest investor in the world, I'm going to be positive. I'm not saying that, but I am saying I'm going to wait until December. I'm going to make a decision, see what we know about inflation, see what we know about a potential recession, and then make a choice there. But history says American Express is not a place to be, which is terrible because I didn't have this information, which, I can predict the future, and I say that all the time. I didn't have the information in June. And the other thing, too, is we weren't really as sure as we are today about what we know about inflation and the economy and interest rates, and again, Russia and Ukraine evolving into the situation that it is. So we'll see. In my mind, obviously any company I own, to be honest with you, I plan on holding for several years. So we'll see what we do about American Express, but I also don't want to get my emotions tied into it either and just hold on to it because I like it, right? And hold on to it because I've read a lot about it. That ain't what this is, right? The numbers are going to tell me what to do. The charts are going to tell me what to do. The company itself is going to tell me what to do based on how their earnings report goes, right? And what they are seeing too. So I've got a lot of things to study and read up on to see whether or not it's going to stay in my portfolio. I've said it 3 times already. I'm going to wait until December and make an informed decision because I'll have 6 months of information to determine what I should do there. Next, you've got Boeing. Now, Boeing and the next company I'm going to talk about, these are from data from the last 3 recessions. Boeing is down 38% on average in each of the last 3 recessions. People don't be flying, perhaps. People aren't ordering new planes, perhaps. I really haven't been that much of a fan of Boeing since the plane crash, I think in 2018 or 19. I think it was 2019. And just the company have really fallen off for obvious reasons since then. And if we are moving into a recession, planes are expensive. Not a place that I would pile into unless, again, you believe in Boeing very, very long term. This would be a buying opportunity. If you feel that way, but if you're looking to make money, or if you cannot stomach these types of losses, Boeing as well as American Express, probably not a place that you want to be. The last one here is one that was extremely popular in 2020 and is relatively popular still today. That one is Carnival Cruise, that is CCL. They're down an average of about 26.5% over the last 3 recessions. This to me is very obvious, unlike some of the airlines, because if you are going into a deep recession, if things are becoming more expensive, if it is harder to make ends meet day to day, you're probably not going to be on a cruise. You're just probably not. And I think that makes sense for most of us, right? Now, yes, they did have somewhat of a return, and there were some spots if you were swing trading or something in 2020 where you could have made significant some money here and there. I think those opportunities are relatively, I think they've completely dried up for a company like Carnival. Again, none of these are a guarantee that they're going to stay down or a recession. Anything can happen. But I will say, though, that on paper, if we're going where most people expect us to go, it's just not a place you're going to go. In defense of airlines, because you could also argue that, right? Well, what about airlines? Well, in some cases, if I have to go to a meeting, if I have to go see family, whether it's, for vacation or not, there's still a lot of business travel that occurs. There's still a lot of, like, FedEx and others have to ship things via air back and forth. So it in theory, I still need an airline. I don't need a cruise line. Nobody says I'm going to take a cruise to go to a meeting from New York to Miami. And that might be fun, but that's just not the mode of travel that you would need to have for necessary business. It just don't work that way. However, airlines do. I'm not here to tell you that because I'm not a big airline investor anyway. I don't think airlines are a great place to invest should things continue the way they are. But I think if I had to choose, I'm definitely choosing an airline before I choose something like Carnival, even though I think both could significantly be down. So those are my areas. I'll run over it again real quick. Aurora Cannabis is a hard no. It always has been for me, but definitely a no. That's something I'm taking off the watch list. It was never on mine anyway. But if you have it on there, I'd probably take it off. Coinbase, no. All the banks, just kind of avoid those altogether. Pay attention to American Express. We'll see where it goes. History says it ain't a good spot. Then you got Boeing. That's probably not going to go well. And then Carnival Cruise. That is my anti-watch list. The first ever anti-watch list that I have put out. Tomorrow, I want to do a positive watch list. Things that you should put on your, I was going to say calendar, but put on your watch list and consider investing in. If you want me to break down a company and make investing a little bit more simple, make sure that you check out the members only. We do exclusive breakdowns of videos every single week. All right, that is it for me. I'll talk to you later.